And we are back at it again. It's Monday. It's another week to make money. And these are weeks we as investors live for. Earnings season. And going into Q3, the bar is set pretty low. And when you have low standards mixed with earnings, rate cuts, and stocks at all-time highs, things can get crazy. But crazy is what we want because it presents opportunity. And opportunity is money.
Let's see what you got.
I'm sorry.
You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
No. Money.
Okay.
I smell money.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks rose across the board on Monday. The S&P 500 and the Dow Jones hit record highs. Nvidia led the risk on rally up 2.64%, actually making an all-time high today. And this risk-on sentiment permeated through the entire market. Stocks, cryptocurrencies, anything that was risk-on. We saw some really bullish action. We saw gains in technology, healthcare, industrials, real estate, energy. It really was a risk-on day, broad-based gains across the board today. Nvidia was one of the biggest winners. It rose nearly 3% above the $138. This even surpassed its prior all-time high close of $135.58 in June. The stock has been rallying after the $6.6 billion funding round for OpenAI. Investors believe much of that funding could be funneled back into Nvidia and semiconductors, and that's why it's pretty much at all-time highs, leading the majority of the Magnificent Seven names. We just saw Bitcoin rally today. It was up more than 5% in the past 24 hours. This could be a sign of risk-on sentiment, but it could also be a sign of the politics going on. Trump has rallied on a very pro-Bitcoin platform, and this rocketing up could be a sign of the times, a sign of what the market thinks could be coming. DJT, Trump Technology Group, is also up 18%. Just something to go off there, although I don't think you should read into it that much. Now, this is also very interesting today. SoFi Technologies jumped 9% after announcing a $2 billion agreement with Fortress Investment Group to expand its loan platform business. The segment refers pre-qualified borrowers to loan origination partners and connects lenders with borrowers. And this is really telling for small caps. SoFi was up 11% today. This is going to be highly accretive to earnings and their customer base. And I think you're going to see more of the same, not just in regional banks, but in the small cap space as a whole. You're going to see a lot of deals being announced, especially as the economy is in this Goldilocks period. Consumer spending is resilient. I think you're really going to see small cap earnings surprise to the upside pretty much from now throughout 2024. And that's really going to support the rally. SoFi was up 11% today. But looking at the sectors on a more granular level, now the S&P 500 was up 0.84% today. A very strong day. You take those days of gains anytime they're given to you. The worst performing sector was energy, XLE down 0.23%. Now, guys, just really quick. This is actually also a very strong Trump trade like Bitcoin, like DJT. And if energy stocks are falling, that means prices are falling. Trump is running on a very pro-energy deal, drill. So energy prices falling is actually indicative of a Trump victory. Something to go there, but I think it has to do more with OPEC and the overall pricing in the markets. But very weird to see a lot of Trump stocks, energy, DJT, Bitcoin to a degree rallying, but that's just me building a narrative. I don't even know if there's any basis for that. Looking at every other sector, we gained, excluding energy, from staples all the way to technology. It was gains across the board. Tech, XLK, utilities were the best performing sectors today. Very weird, defensive and highly cyclicals, like literally the opposite end of the basket up at the top. But we also saw gains in XLRE, XLV, XLF, healthcare, financials, industrials, comp services, discretionary, materials. It was broad-based gains across the board. And to be honest, a very solid day of trade in large caps, in small caps. But really what capped it off today was just the mid cap space. They really did outperform the large caps as well as small small caps. So place to be today was in mid caps, but all in all, gains across the board. And what's very, very interesting and probably the highlight of today was market breadth. Looking at the percentage of stocks above their said moving average. Guys, just last week, we finished the week off at 43 and 46, below the 50% line in stocks above their 5-day and 20-day. We're now sitting today at 74% of stocks above their 5-day, 58% of stocks above their 20-day. What's telling is that this figure right here is actually above the 100-day, 150-day, and 200-day moving average, meaning that there is actually market breadth expansion that could happen over the next coming weeks, assuming we hold on to these gains and stay at the highs where we are right now. Very, very bullish. So if you think things couldn't get any bullish, the data is telling us that it can. And just for the record, anything above the 50% mark in any of these averages is very, very bullish. That's what you want to see. The higher, the better. And everything just looking really good for equities, guys. In this type of environment, you want to hold equities. And looking at the charts, this is the year to date of the S&P 500. Very, very bullish. Higher highs, higher lows. And you can see across the board, equities are very, very strong today. The S&P 500 up 0.77%. The Nasdaq 100 0.82%. Smalls up about the same. The RSP2 mid cap. So it really was a broad-based gain. The same amount of gains across the board. And then we also saw some very weird action in yields, but take it with a grain of salt. The bond market today was closed because of Columbus Day. I think it opened at 1 p.m. So very muted action. That being said, we did see yields rise in the 2-year, 10-year and fall in the 30-year. So yields kind of having a cap on activity, but what really capped activity today was the DXY. Now it's very weird to say that in the context of the market gaining, but yields rising and the dollar rising is actually a sign, the economy is doing good. The market's still pricing in the data we got at the end of last week, including the data from the big banks, even though that was a corporate profits and an earnings picture story that really goes to show the strength in the overall economy. The banks are a barometer for the overall economy. Now, guys, we probably would have had even bigger gains here today if yields didn't do what they did and if the dollar wasn't as strong. But that's just the market we're in right now. Stronger economic data, stronger earnings means the dollar's going to rise, yields are going to rise. And right now we're seeing yields up, stocks up, but that correlation will end when the 10-year yield gets at 4.15. We're not quite there. That's when yields are really going to start to affect stocks. So we're sort of in the clear for now, but things getting very, very close to that mark. We don't really want that. That's when yields would be in the 80 percentile range relative to their 52-week average, and you don't really want that in the 10-year yield. Commodities were all red today, but their gains and losses were very, very mixed. Crude fell 2%, very volatile. That's why energy stocks were falling today. Silver down 0.8%, and gold largely remained pretty robust. All in all, still sort of consolidating here at this 57 and 5500 area, sort of building a base, looking for the next move to the upside or downside. And given the strength of this rally and the fact that we are in rate cuts, I think we are going to see a move to the upside. I have a $3,000 gold target in Q1, Q2 2025. So I do think we are going to move high on bullish gold, bullish silver. Don't know what to think about crude though, but let's dive into the S&P. Guys, does this look any more bullish? Can this get any more bullish? I mean, year to date on a percentage return basis, up 23%. We saw the gamma flip zones, the gamma zones move up across the board in all of the indices. So let's actually just zoom in and have a look. We saw a move up from the 5750 area to the 5765 area. We also saw the core resistance move up from 5850 to the 5905 area. So a little bit of upside. So if we do go ahead and hit that 5900 area today, especially with Nvidia at all-time highs, do not be surprised if Nvidia is rallying, the market's going to rally. I think here at the 138 level, 140 level, Nvidia becomes the biggest stock in the world, the most valuable company in the world. And that's what the markets are doing right now. We're just going to continue to move higher in the S&P 500. 5650 is now the put support. And guys, the game plan in positive gamma is buy dips, sell rips, and you want to aim to the 5905 area. So leading up into this OPEX, that's the area. We're 41 points away, and that's about a 1% move there, a little bit less than 1%, 0.8% move to get there. Do I think we're going to get there at the end of the week? Probably. And then maybe we see a little bit of downside into the weekend. That being said, very constructive price action we're seeing in the S&P 500 and the Nasdaq 100. We sort of had this double top formation right here. We've broken above. That means all-time highs come into view. Very, very strong. We're in positive gamma. The core resistance is at the all-time high area, and the options market is telling us we want new all-time all-time highs. I wouldn't fight the trend. If you are looking to short, maybe short at those all-time highs if the core resistance shows some resistance, but you never want to short into all-time highs. Looking at the RTY, the IWM, the Russell 2000, this now looking like a higher low. However, we still need confirmation, and that means we need to break above this high, a close, not just a wick, as well as a close above this high. So we haven't had full confirmation. However, this is looking like a higher low in the IWM, the RTY, and this is a higher low relative to this and this and this and this. Very constructive price action. I think the markets are feeling that earnings are going to come in a lot better than expected for the RTY, for the Russell 2000, and rate cuts are going to be the catalyst for those earnings beats. However, we just need to go break this high to confirm this. But the gamma flip zones did move up from the 2175 area to the 2205, as well as the 2150. The put support stayed where it is, and I think we saw a slight move up in the core resistance. Regardless, the S&P 500, the Nasdaq 100, and the S&P 500 all exhibiting very bullish signs leading up into this OPEX week, which is normally a very bullish week. On average, we see returns of 0.75% in the October OPEX. I believe it's the best or second best OPEX month in the year. So we are in a bullish week, and don't be surprised if the market continues to do what it's doing right now, and that's higher highs, higher lows. And then diving into the RSP very, very quickly. Man, super strong. Look at that candle. Very, very strong. What is the RSP doing on a year-to-date basis as a percentage return? 15.4%. So still lagging the S&P 500 by about 700 to 800 basis points. So alpha still being generated in the S&P 500. However, this is relative strength, and I do think it's going to continue. And I pretty much say it every video. I think the RSP is going to hit the 200 mark sometime in 2025. Super, super strong. I think we're going to see continued outperformance in this name into year end, into 2025. However, guys, the thing to watch, a risk in this market right now is definitely the dollar. The dollar's creeping at that 103 level. I mean, if we start breaking these highs right here, we start looking at the 104.50, 105 area. However, if we do find resistance, we can actually pull back, and then our pullback zones that we would look to find support is the 102. But right now, the dollar looks very, very strong, and that's because the US economy is very, very strong. Earnings are robust, and if you are going to hold any type of currency, you're going to want to hold US dollar, especially when the US economy is doing what it's doing right now. Very, very strong action in the dollar. That's obviously putting a cap on the market activity, stuff like equities, as well as yields. Look at the 10-year yield, guys. The second this gets above the 4.15% mark, that's when things are going to get pretty crazy. So that's like right here, right at that zone right there. So the second we start moving above this line to the upside, that's when yields are really going to start to affect stocks, and that's when you can see some sell side. However, we are not there yet. And right now, guys, the game plan is hold equities, buy equities, especially the S&P 500. You know the levels. You sort of want to buy this gamma flip, aim to the core resistance. The S&P 500, that's 57.65. That's the 20,100 area in the Nasdaq 100. In the RTY, it's the 2,200 level, and in the RSP, it's the 176 and 172 level. You just can't see it, but it's right there. That's where you want to buy for the RSP. And guys, there is never a dull week for the market. This week, while we have a huge earnings week, we are also in the October OPEX week. And I have every single OPEX week since 1980 for every single month. And looking at the month of October, it actually tends to be very, very green. In fact, it is one of the best OPEX weeks for the year. 32 wins, 12 losses, average return 0.75%. Going into this week, history and the data tells us that it can actually be a bullish week, but I don't think the market is going to trade on seasonality this week. It's mostly going to trade on the fundamental picture. And right now, we have actually seen earnings pull back from the expectations on the 1st of July. Q3 earnings is currently at 4.9%. On the 1st of July, it was at 8.5%. So we've seen a massive downward revision in third quarter earnings, fourth quarter earnings as well, and first quarter 2025 earnings. Now, this is really, really healthy because number one, expectations aren't incredibly high. And when we do beat, you get a nice pop in the stock market. And it also makes for valuations to churn over. Now, let's actually talk about Q3 earnings at 4.9%. that is currently where we stand in the S&P 500. This number is expected to change throughout this week and next week as well. Excluding energy, earnings is at 7.3%, very healthy, and we are actually beating the estimates as at the start of earnings season. While on the 1st of July, we were looking at 8.5%. If we go to the start of this month, earnings expectations were 4.7%, and we are beating them ever so slightly. Margins are unchanged and revenue is unchanged. The best performing sector for earnings so far is technology, but these are blended earnings growth rates and anything can change. Com services in second place, and those two sectors are driving the highest revenue growth as well, and they are also driving the highest margin growth. So if you're looking for higher margins, higher earnings, tech, com services is where you want to be at. While we have had some major earnings revisions going into Q3, if we actually look at negative EPS guidance, this quarter marks the lowest number of S&P 500 companies issuing negative EPS guidance for a quarter since Q4 2021. While we have had significant revisions in earnings, we haven't seen negative EPS guidance, and this is the lowest level since the fourth quarter 2021, guys. Very, very robust. This is the type of stuff you see in a bull market and a strong economy. And after this data, FactSet came out and they said the S&P 500 will likely report 7% earnings growth for the third quarter. Right now, we're sitting at 4.9%. FactSet are expecting huge earnings beats on top of what the already blended earnings growth rate is suggesting. FactSet released this article just a couple of hours ago. And if this is the case, expect stocks to move higher into this earnings season. And that's the thing with revisions. Yes, earnings do get revised and stocks can suffer, but if stocks do beat, it does make for a very nice bounce after the earnings reports. And generally, if your stock has a nice bounce after its earnings, it tends to be resilient into the next quarter earnings. Now, what are companies planning to do with all of the money they're making? Buybacks is the answer. Corporate buyback authorizations year to date have hit a record $988 billion. In 2024, corporations will be the largest net equity buyers, driven by share buybacks totaling $988 billion. And diving into the macro, we got this awesome chart here from BOFA, and BOFA expect the unemployment rate to rise to 4.3% by the end of 2024 before troughing at 4.5% by the third quarter 2025, followed by a relatively quick recovery to 4.2% by 2026. They also gave us this note right here, and I'm going to quote them directly. In the September household survey, total employment was up 430,000 versus 168,000 in August, while unemployment fell by 281,000 in September and 48K in August. This came along with low layoffs, more entrants into the labor force, and an increase in full-time jobs and a decline in part-time jobs for economic reasons, meaning more people are joining the labor force and we're seeing a shift towards full-time positions. Overall, this is a clear sign that the jobs market is gaining strength with more stability and higher paying full-time jobs are on the rise. Very, very robust. That is not recessionary. We're also seeing the economic surprise index for US officially above the zero line, meaning economic data is coming in better than expected. We've seen a robust recovery from the lows here in July and August. And at the end of the day, and the economic data has eased the worries about a significant slowdown in the labor market and the economy overall. Consumers are still spending, wages are growing, and corporate profits have remained resilient. And now the labor market is on the up and up. Very, very bullish. Now, let's dive into earnings. Tuesday, we get Walgreens before the open, United Health, Citigroup, Bank of America, Johnson & Johnson, Progressive, Charles Schwab, Goldman Sachs, State Street, PNC, a star-studded day. That is such a crazy earnings Tuesday before the open. Then after the close, we get United Airlines, Interactive Brokers, and that's really it. A very heavy Tuesday, especially before the open, and then we'll tackle the other days as they come. And then for data tomorrow, we start off pretty light. We have mortgage applications, the import price index. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.